This is an important part of the discussion. Interest rates always play into valuations. Is there an expectation now that the Fed could be a little bit more on the fence about this than we thought previously?
Hi there. Good morning. Fundamentally, yes, I do. I think this remains the biggest risk at the moment to valuations, is as much as absolutely things are moving in the right direction. You know, we've heard a little bit of language loosen slightly around the optimism and the potential for cuts. But frankly, the market is behaving in a way as though these are absolutely, you know, a certainty. And we simply aren't there yet. And I don't think that that is going to change anytime soon.
If you feel as though that's the case, there's possibly a case to be made, Sophie, that the markets should be maybe reacting a little bit more to the downside, kind of like what they've done over the last couple of days. Do we feel as though there is still real downside risk to the market beyond what we saw in yesterday's session?
I think there is potentially some, absolutely. But what I would say, and, you know, I've said this before, really, is I think that actually the phase that we've entered is kind of this wait and see. You know, it's almost like a holding pattern. So in the absence of anything really dramatic changing, I think that really the bigger problem is a lack of a catalyst for more impressive gains rather than anything being dramatically to the downside. But obviously, in terms of those hunting for momentum and sustained momentum, I do think that is going to become increasingly hard to come by. And particularly when you start looking in regions such as the US, where valuations are already looking very full, I do think there is a bit more risk there than is currently being priced in.
If that's the case, we've been speaking so much about this idea that the mega-cap technology-oriented names have been the driving force behind the market upside for the last several years at this point. They seem to become a little bit more vulnerable with this latest mini pullback, if you want to even call it that. Is mega-cap technology still the place that you see some of that leadership developing, either to the upside or the downside?
Yes, I do, but I don't think that these stocks are created equal. So I think really when we look at the likes of Microsoft, for example, when you look at what's underneath the hood there and the fundamentals that are at play, as well as the potential kind of moonshots when you look at AI, really quite compelling. But we are seeing some divergence, you know, the likes of Apple, Tesla, for example, who simply can't participate in the excitement in quite the same way because being a lot more consumer-led, they are in a more difficult spot. I certainly don't think that we're going to be seeing this necessarily broad-based rally. I'm not calling an end to the Magnificent Seven, but I do think that there are more challenges to overcome, particularly in those consumer-led sectors than, again, that are currently being priced in.
Sophie, before we let you go, artificial intelligence has been a lightning rod of a point for the markets these days, whether it's bullish or bearish. Is AI still a big trend for 2024?
Absolutely. I can't see AI going anywhere anytime soon, but I would just caution that we are realms away from knowing who the winners are truly going to be. This is, you know, a life-changing technology, and we're not there yet. So I would just be slightly more cautious than some on that note.